Hello, good afternoon. It's 5:09 p.m. On Wednesday, April 13th, 2022. By the way, quick audio check. I want to record this. Anybody having a problem with my audio on this machine today, this one? Because the last recording, a couple of folks on YouTube said that they couldn't understand anything I was saying, and the mic was bad. This is a live cam mic from Microsoft, live cam. I just that I've covered the camera part of it. Sometimes I do a Zoom with what do you call it? With Benzinga, and they want to have my pretty face on it, and I don't care. Fine. Actually, they want the machines behind me. And I brought it the mode you can blur it so you can see what's in the back. You get an idea of what's going on, but nothing detail. So it looks good? Okay, guys, I appreciate that. Nobody else has complained here, but this fellow did. And best is to isolate, where the problem is. Right now we have another issue we're trying to isolate tomorrow for ORB. Let's not get into that. Let's worry about here. Okay, no major housekeeping items to report other than the progress on version 4.4 is pretty good. We had a pretty good week last week, but remember, the problem is not the code, the problem is the market. And if you look at the equity curve, you will see what they go through. It's just general education. When you go to a curve, you'll see it's no straight line, never is. And we've gone through a very bad period here, partly because most of the moves are happening like late in the day. This system is built for opening, ORB, right? Opening range breakout. So, but we make up for it not on the system itself, but through what me and Peter offer manually using what else we have on the system with OTF and DMC. So, but we think this is, and I got to update this. This is 322. You're going to see this thing pull back up again. As of, let's say, I do it on Friday. So most likely, because tomorrow, it's a short week. Tomorrow's the last day of the week. Good Friday is on Friday. And that, by the way, tax day moved to Monday. So most likely tomorrow night we'll update all of these. Okay. These are rolling 12 months. So we're going to do that. Version 4.4 is operational. There is no more 4.5. I'm looking at SOW for version 5, the departure from 4.4, which it also not just scales out, it also scales in. So it reduces your overall risk tremendously. And that came up about with the Gamma ladder that we built for the HR system, which is the last hour. We've always called it last hour HR, 3 to 4 p.m. New York time. We're officially going to have a system for that. But for us to get there, we engaged in this thing called Gamma ladder since December 6th or December 3rd, I forget. But that's done too. That's on version 6.15. I mean, we work feverishly on that because it's very involved. It is not for distribution. It's fairly complex. Of the people that I have in the room, maybe one or two would qualify. So I'm not going to go there. Yeah, in terms of, you really have a lot of experience with PlayStation. And also a fast trading, because that's what it is for. It's a Gamma ladder. You know what delta is, right? Change of price of the premium versus change of price of the underlying. A gamma is change of premium versus change of price. So it's a second derivative, right? So it happens very fast. And as fast as it happens, you can also get killed in your account. So, I mean, if I go through the room, I'd see probably one or two people would be qualified to use it. So we just decided for now, it's not going to go out. And we didn't know how to even use the user, to make a user guide for it. The user guide has to be visual. The problem is, how do you know what condition it comes in? We have to make a lot of recordings, then edit them and all that. I don't have time. Seriously, I don't have time. My problem is that it's fun. It's not this. I've got to be in New York, and I got to manage what I have and go to New York at those guys, because now they've been getting these reports and they're looking at it. Why can I have this? I said, write a check. This is a 7X system. Wow, 3% we shoot for. You do 7X, it's 7X for a year. They're looking for 36%. This is 700. And they want size. The problem is that they want size. And that's a separate issue. We have to look into what's called open interest issue analysis and so forth. But anyhow, we'll see. Anyhow, in the meantime, I got to finish this. So I'm sorry, last week I had to take last week off from this because I was just doing time bank work. I'm gonna have one more here on the 20th. It's a week from now. The 27th, I won't be here, or maybe on my way back, and I'm not gonna do a webinar then. Well, maybe you do something on 28 or 29 or 28 or like a Saturday. We'll see. Either 28 or 30th. Friday, nobody's going to be around. But we'll figure it out. But Nick did. So one more PMT this month. Definitely. Maybe two, but definitely not on 27th because I'll be in New York. Wish me luck. All right, economic calendar. Let's get this show started. I have a bad habit of going on tangent to the event, so my apologies. Well. Let's go to CPI first, and then we're going to talk about PPI, because we have talked in the chat room many times, especially with the comments that Peter Green, our moderator, had. Okay, we're printing 8.5 year to year. I'm not going to worry about month to month because that's a lot of noise. But year to year, CPI is coming in at 8.5, excluding energy 6.5. That's CPI. Here's the problem, PPI. So that means that they're eating into their earnings. Let's take a look. Cost of goods are running about 11.2 for producer prices, right? That's the cost of goods for this end user, right? This is the cost of goods. Okay? So somewhere in between manufacturing and distribution, they're eating it. That's not going to continue forever. You see what Amazon did today. They're surcharging their third parties, their resellers, the people who use Amazon to have a store inside of Amazon. They got to stick at somebody, and they always give preference to themselves, so they're putting the resellers at a little disadvantage, but the market liked it, rallied. So we're at 11.2. What have we talked about last couple of weeks? Not last couple of weeks, last couple of months, because this comes once a month. We said we're going to see a 12% print, or let me put it this way, 1% monthly print. It came at 1.4. That would translate at a 12% run rate. Now, this is a TTL. Where's my mouse? Hold on 1 second. So I'm trying to get to a point here. Sorry, guys. Okay. I was saying that we're going to see a 12%. We're not there yet, but that would translate to 1% per month, except it's not equal. This is trading 12 months, because last year this time there wasn't such a thing. Now you got 1.4 now. And Peter was talking about like 2 weeks ago. He says, see, the expectation of a PPI is between 12 to 15% annual. Okay, we're already ahead of that. We keep this rate, and oil stays up here. We're going to have issues with Ukraine, so on and so forth. And if, what do you call it? If Fed tightens, obviously, you're going to have a drop on the oil. But so far, we get to the curves there, to treasury curves yet. But so far, come explain to me why we have this activity here. Let me go to our time table weekly. Okay, there we go. Explain to me what this is. This is the double bottom. See the W? And with this new general appointed as Butcher of Aleppo, Syria, and new weapons coming in, Iran is helping them, taking Iraqi weapons out of Iraq through Iraq to Bandar al-Salih with a boat into the other side of Baku, which is the Russian side. And nobody's watching that. So during that smuggling act, that tells me, first of all, Russians are having military problems, major size. They will want stuff from Iraq. I mean, are you kidding me? So something is big time wrong. They're not going to back down. They're fighting. So we're always going to, even if fighting stops today, this oil, the Russian oil, is out of the market for maybe only part of Europe. So with that shortage, this thing is still going to go up. It's going to go and challenge this. Things are not as bad as we think they are yet. Wait until you get 2 or 3 barrel bombs a day with chemicals in it. Don't forget what happened at Aleppo. History will repeat itself. So with this being up, I don't see the inflation backing down that easily. So we could be at 1.4 times 12, that's a 1.4%. But that would be at a run rate of 16.8. That's 70% inflation. The developed industrial world have not seen a 70% inflation in about 30 years. The displacement that will create is going to be massive. Massive. So why would you want to be long here? I don't know. We'll find out. So that's what's happening with PPI today. And obviously, let's see. We went up. Yesterday was a different issue. Yesterday, obviously, was the what do you call it? The NYC Metro. That was sad too, but I think they got the guy today. So let's see what else we have here. We have to watch for this week. Remember, tomorrow's expiration, by the way, for April, because Friday is Good Friday. Sorry, guys. It's been a very, very long few days. So, that Barkin spoke today. Jobless claims, obviously retail sales. Okay, let's see what that's going to be. That's going to be crucial here. What else do we have? Consumer sentiment. Okay, retail sales. Surprise, surprise. Okay, 0.3, 0.6. Wow. Look at that. Oh, it's 0.6. I'm sorry, 0.6. I'm sorry. 0.3, 0.6. Okay. So just saying that the sales are continuing good. Most likely, we'll see what it is tomorrow. X vehicles, 0.2. Yeah, this is a 5. That's a 5 times as much. Wow. I don't know about that. 4.7. And gas. That's a half. That's a quarter. This is also improving. 1.4. Okay. Another key point to watch. Again, tomorrow is expiration. And there's nothing. We're closed on Friday. Now, futures may be open partially. I don't know. But it's probably half day. We go to CME, and there should be a calendar there. We'll take a look at that. I can post it after the close. The following week is GDP, durable goods, that group. Okay, week 4. Anything here that we need to look at? That was a 3-year auction. There was a 10-year auction. Let's see what 10-year auction came in. I missed that one too. 1 second. 34. Wow, look at the bid to cover. Jeez. Yeah. And so it's still at a discount. Look at the yield award was 2.7. Nominal coupon rate was 1.87. So there was the discount sales. Okay. Let's go there first. And then we start our chart with yields first. Okay. Now, didn't have a webinar last week. If you recall, last time we talked over here, I said what? I said I'm dying to see the opening print. Come April 1st, that opening print comes, and that's the level. It looks like this, so it's hard to it's like this when it comes when it opens up. And now, you see the level of stage. This is computed based on the prior month activity. We mentioned that, and of course, I heard it a couple of times, both publicly and also a couple of friends I've talked to, who don't understand bond market. One of them is an energy distributor. Yeah, the electric and gas trader. That's they trade capacity there. Supply and demand type. And very smart cookie from Cuba. But very smart, he was raised here. He came here when a couple of years old. Very, very smart. He says, "Hey, did you notice this?" I said, "I've said in our webinars. Go to YouTube." I like doing these because it creates an independent timestamp. I don't have to say I said this. I promise you I said that. No. There's audio video. Go take a look. You can't control that timestamp. This was the fastest rise we've had, as far as I remember. I've been looking at these, I don't know, since I figured out these feeds out of SIBO. These are SIBO indices. So we pulled back a little bit, but new highs. Now this is, I believe, 2 years or 3 years. So I keep on forgetting it. So it should be 2. Yeah, so 2 years. So for the last 2 years, we're at all-time high, which makes sense if it was 2 years. If we go 3 years, still pretty good, but this goes nuts. Let me try 3 years. Remember, we look at it all at the same time. That's what you want. You want to be apples with apples. Okay, so, oh, I turned that off. I see, that's why. Okay, this is a 3-year high. We're already at 3-year highs. Let's double check, make sure we're okay. Always double check your work. Don't take anything in for granted. Here's what, let me activate this then. I know what's wrong there. Off. So let's start on. Well, yeah, there we go. It's 2.4. 3.9 is 2.4 yield to mature discount rate. You have to convert it to yield, YTM. These are YTM because they're only one. They're longer 1 year duration. This is a 91 day, so you have to convert that. But so the 2.4 becomes like 2.6, 2.455, something like that. Of the equivalent bond yield, so the same as these. Still, look where it is. And so we're down there. So I'll take this out. I'll just disable it. Okay, so I get better resolution on these sides. But nonetheless, the moving side, this move, we have not seen in percentage change. Percentage change of this from the beginning of the month to the end of the month, we have not seen. So obviously, this was a massive displacement in the bond market. A lot of selling, a lot of selling. So maybe it's easing off a little bit. That means when the yields drop, the bonds go up. So in value, not face value, but current value. Right? Let's go to time chart. Now, again, I'm getting these comments like, "Are you ready to go long? Why are you not long?" And I didn't have that webinar here, but before that, I said, "What? I'm not ready to go long." This was the reason. Now, what was the reason? What did I tell you guys back there? Volume is not there. And if you look at Larry back here, this was not capitulation down there. Let's go to, remember, this is the stuff I use daily myself, so they're not really pretty for a webinar or production situation. But if you take a look at it, you'll see that, and remember last night I said this thing could be turning? Yeah, it did today, yeah. Even though yesterday we opened it up, but because of the problem in NYC, that sold down. But look at what I'm trying to talk about this here. Here's October 24th, right? Right there. This is January 26th or something. 24. April 24. I'm sorry, February. This is the day we mentioned. No 90% here, guys. None. Here touched it. Hold on. Down below it touched it a couple of times. But that's Russell. Key is these two. No baby with bathwater out of the window. No capitulation. We're not done yet. We're not done yet. There's going to be a downside here. Now, what's going to be a problem? I don't know. Maybe put in since a couple of squadrons of MI8s. They drop barrel bombs everywhere with the chemicals in it. I don't know. But people get desperate, they lose their sense of logic. That's what they say. For example, I was reading something today from a friend of mine. My dad worked for her father in Iran, a very famous general, that said, don't make decisions in haste, especially when they're about to break you. That's exactly the wrong time to make a decision. And very well said. Have you noticed when you get down here, you decide it's time to short? People do that. They've been long from here, they're getting crushed. They're finally convinced they gotta get short, and then it turns around goes up. It was going against me this much, I didn't change my opinion. We're down here. But that's we're here. So the issue is whether to go forward. My question is, as a fundamental question, we spent $700 billion a year in defense. Right now we can hardly use it. Why are we doing this? We can't stop this guy, and he's coming in with trucks and tanks that look like it was made out of Fiat factory. Little Ukraine, look what havoc it caused. We're near World War III. What we don't know is what Putin thinks, and the market just rallies because we're oversold, but we haven't completed our mission yet. Maybe one glimpse of good news, and everyone wants to jump in. I think I like to believe my own view, which is I read both sides. I don't take one side at all. I fact check everything. And slowly shaping up as if things gonna get a lot worse before they get better. I still believe that we have a chance of seeing some lows before 4th of July. Not viewed and situated by others, but I'm just look for evidence, and I don't see it. The PEs are coming down. I did a quick calculation with a friend of mine who's very good in fundamentals. Let me bring this up. No, here. About where we're going to be in this area. Okay, based on our calculations of I think 208 was last year what the S&P earnings were, $208. At peak, which is 4818 up here, 4818, yeah, there we go, 4818. That was a 23 PEs. And if they're downgraded, Goldman Sachs downgraded their earnings, PEs have to come lower a little bit, the multiples. I think maybe around 18. You have 4 to 8% inflation. So your earnings should be written up about that from 208. However you do that math and carefully, you'll see that somewhere in 3,800 would be our fair value of S&P. So we're about 600 points or 6,000 points on a Dow overpriced. That's the numbers I'm looking at. Okay. Now, at the end of the day, you gotta trade what you see, not what you think. It's always good to have an opinion, but more importantly is that not to blow up the cash that you're managing or you own, what have you. And that goes to trading what you see, not what you think. So with that said, let's go through the numbers here as they say on NPR at night where we are. We're still on a sell on a CI basis. We just bounced over breadth trust. We're neutral on McDonald oscillator. I opened and closed this before you guys came in. I always do that. Just want to make sure that it's clean. We had an up volume. There's no question about it. About 5 to 1. Remember, that's the inverse. This is very ominous. This is a little bit better. But outside bar, close below 50 bar. Back here, there was the argument that the death cost will be reversed. I don't know what they call it, but this everybody calls death cost. But what if the 50 goes over that? That's going to be reversed, this death cost. We're going to get back to normal, whatever that is. We didn't do it yesterday. We're sideways. More importantly, on the NASDAQ, which I think far more important these days, but it's the same concept. It's market cap. There's some names that are shared. But look, we can't get through 50. Now, one day doesn't make the market, but we'll see. I just don't see us. For example, tomorrow I expect it to be a down day. And maybe overnight we go up first, then they knock it. Remember, the nature of bull markets are you open low and you close high. So in the future, the night before should be low, and then we close near the high of the day. All we have done so far, we have opened positive at night and closed in the afternoon, except today. Keep that data point, okay? And that may be because we were just short term, we were very oversold, and it's trying to reverse itself. But that's the pattern you want to watch. Where we close has nothing to do with how we open at 6 p.m. in the afternoon. What matters is whether or not HR is going to happen, 3 to 4. Why? The big trades come there. The majority of people have a chance to make a decision based on the news, their analysts, the visits, econ data, and they square off. Tomorrow's going to be a bigger scoring up against a 3-day weekend. So we'll see. Let's go to Canaries. Dow could not go through -1. I'm saying translation could not go. Actually, this to me says there's a lot of trouble. S&Ps can't go anywhere without transportation. Look how they behave. They've really been knocked out. So we shall see. Today was a healthy day. But what if it's the peak and we're going to do this? In between the two channels. By the way, speaking of channels, we just put the Sigma channels up as a test on one of our screens for OTF. Combine OTF with Sigma channel. Monroe, when you come in tomorrow, you're going to see that. Your eyes are going to pop. So I respect a lot of Sigma channels because it's measuring the vibration of the asset against itself. And what if this thing can get up here and we rotate? If we start going to that channel, Dow, NASDAQ, S&Ps will follow. And again, let's go to the trenders. We want to look at one thing and one thing only. Formula, -7. It's worse. Russell is the worst in terms of distance between its value and 200 day, 7.2%. Okay, so my thinking is any failure at any of these two will give us the clue to go further lower. As you know, we don't go up without in S&P or Dow without the support of transportation. We don't go anywhere with NDX without support of Russell. That's why a lot of time we looked at those. As a matter of fact, we had an internal document indicator based on these two, which we no longer push because we have better products now. But like late, no, Obama had just come in. No, it was post that. So that was 2010, maybe 2010, 2012. Yeah, between first and second term of Obama. In Chicago, that's what we worked on quite a bit. Remember, we also had a very crazy 208, 209, where a lot of correlations were broken. So you couldn't necessarily go in there and work on something that was working 2 years before. Remember, 2007 on, I'd say October of 2007 on, which was back then the high, it changed the fabric. Don't tell me it didn't. Go back to the chart, you'll see. A lot of things that worked up to that point stopped working within 6 months. Again, why? I think fear and greed is just a massive amount of volatility. I don't know what size it is, but housing is a huge part of the economy. If you add to that automobiles, Detroit, Michigan, Illinois, Indiana, and Wisconsin to it, that's a massive part of our economy. But those two in trouble. A lot of things changed, and also government coming to the market and bailing some of these things out, not allowing markets to punish the less efficient, changed a lot of correlations. But I think the last 10 years, we have a chance for a lot of these to come back, become quote unquote normal. And so I have a little bit more faith now on watching these. Taking a look again, that's a texture change. The market changes a little bit, but actually correlations stop working. And large scale. Not what you're looking at. But look at what other correlations are looking at without them telling you what the details are, but they say theirs isn't working either. So something is wrong. I think we'll end that both ways. That's a good sign. In the meantime, keep watching Russell and transportation. Again, we're at 50 bar. Failure is bad. We're already have not required transportation. Let me come back here 1 second. If I'm rambling a little bit, I'm sorry. I've had very long hours. I finished last night, I think 12:15, but then I had a wake-up. Couldn't fall asleep until about 2. I was wound up quite a bit. VIX and VXN. I'm being a big fan of VXN now. Frankly, it helps me even better than VIX because everybody and his brother is watching VIX and VIX futures. I do watch VIX futures too, but this is because I trade NQ so much. This is what I want to watch on the closer time frame. Sometimes actually during the day, I go here and do this. Let's take a look at it, the hourly chart of these. Okay, so you could see early on as it changes some levels and breaks through them, what kind of day you're going to have in an index. That's because of the negative correlation, almost near a -1 correlation factor. So I would say for the time being, path of least resistance is going to be, I don't know. Yeah, the answer is I don't know. Again, I go back to what it is. If you can tell me what's in the head of Putin, I can tell you what the market would do. And I say that with the fact that it's known that neither CIA or White House knows what's in Putin's mind. Probably some of his generals don't know what's in his mind. And that's a really very, very big unknown. Because this SOB also has a bunch of nukes, about 1,600 nukes or so. So I talked to a very, very, very astute trader today in options. One of the guys that I know has been in business longer than most option traders I ran into. And I asked him, I said, I was kidding him. I said, listen, I'm a poor dumb immigrant. So you got to be slow with me and to the point. He fell off the chair laughing. He goes, yeah, sure. You have a bridge for sale too? I said, no, seriously, 50 words or less. How would you brand, name, or categorize this market we're in? He said, I'll give you one word. I'm all ears now. It's treacherous. Now, I could see it from an option point of view. Because when your walls are up here, your bid ask are all over the place. And then some you get there's no activity. Out of the money, boom, zero volume. And the dangerous to get in. Maybe a good trade, but there's no volume to support it. And I can't do it because I have a service. When I pull the trigger, I got to keep track of, let's say if they're all traded, 10 cars, 10 contracts. What are we looking at? If it doesn't match that, I'm in trouble. So it's been difficult there. But if the big guys like that don't realize what kind of market we're in, you can imagine what's happening to mom and pops. So it's very, very difficult. And also, you should be noticed also, Nancy's been reporting to me. The bid asks are at the margin are widening. That lack of volume, that's true. And so the market maker is got to make his cover. It's got to make it cover its overhead. Got to cover its nut. So the only way they're doing this is opening the bid ask. Now, a couple of our option trades, not on it, it's fine. Individual names. One leg would not trade at all. Or would trade such a wide bid ask. It would take you suck out a lot of the profit right there, if there was any. So we've been a little bit hesitant. We're going to be nibbled back in on the option side. I will go back on PMT and try to formulate the game plan. But I think my path of the next move is to the downside, not upside. I mean, we're just not done. Even this move down here, again proved we're not done. Look where we are now. Look where it was actually yesterday, today was hilarious. Peter's good at this stuff. Peter was just going nuts. Pinpointing where we were, I think. I forgot where we were in the day. Yeah, it was here, yeah. Oh, we were up and this was dropping. Yeah. We were up. It was positive. We closed down here. Right? That's so close. And this dropping like a rock. This is fact. Take a look at this. I said, yeah. And, logic is, you know what Putin's thinking? You have like a Putin coin you can flip because that's and the market is that way. Market is showing the market in aggregate, not individual person. In aggregate doesn't know what's next. To me, that's caution, sign of caution. I've been taken to the woodshed and taught a couple of lessons in years back, in periods back, not just years. Periods where you had events like these, where we never had one really like this, but something close to it, where the volume, the open interest drops, volumes expand, volatility expands, and most of it is exogenous. 2008 is kid stuff compared to this. At least you know what we're doing here. We know what was wrong. How did we attack? You got Ben Bernanke, you got Hank Paulson. These were serious people. The only one really right now that I like, to be honest with you, is Auntie Janet Yellen. She said this is to comment to Putin. Putin has to make a decision to have an economy or to have a war. Can't have both. That I don't know how tall is she, like 4'11" or something. She's a one tough lady. For somebody who came out of Berkeley from the left coast. Yeah. So I respect that. So I think the road ahead is treacherous. Was this for the heavy duty professional people? I mean, this guy's traded options probably more than anybody else I know. That's 20. That's 40. I'd say it's traded about 55 years. You know, Steve is not that old. He has traded before Steve. And because it stretches, you could get a feel of it. Okay, let's go to SQ. SQ ran up. Now remember, our last webinar was a little bit before that. Actually, we were in this zone, I believe, 2 weeks ago. That was our last webinar, right? I believe that was our last webinar. Yeah, 30th was our last webinar. Correct. Yeah. Now, that's 30th. Yeah, that's 30th actually. Boom. Yeah, that was the beginning of the dip. Right, gotcha. 2 sigma, went to 2 sigma, pulled back. Now, right there, look where the sky, what do you call it? SQ was. Following that, it still went up. Went to 2 sigma plus with a level of 147, 168, 147, 146, I'm sorry. 146, 147. Not exhausted, not a big signal, but thereafter we start dropping. And so there was some puts down below. I think they're probably going to cover. There was a couple of comments about that also today. So, you know, we will probably go up to 4,500 and then lose it. And that's going to be an expensive one, like this. Go sideways to up and then lose it. So I expect by then, because by then nothing has worked, either economically or politically or militarily, you should be able to see these taken out. 41, I think 4,100. My first estimate of the signal the downside move is on is 4,000. So write down 4,165 and 4,000. TD. Sorry, I'm looking at the dehydrated one. All right, now. Okay. Now, we may have a little issue here. J and K, they're both trading. Okay, no, we don't have to change anything yet. About expiration, okay? J and K, no, they're both trading. Okay, so this guy probably expire next week, not this week. Yeah, because of the short week. Yeah. See, the first week of the month was 1 day only, April 1st. So we're gonna roll tomorrow into K, and is it Q? I think it's Q, isn't it? For August. So we're gonna go from April long and July short to May long and August short. What is that? I don't know what it's gonna do, but it will be after tomorrow because settlement of the J contract is next Tuesday. Why am I meticulous? Because the other guys are. You know, you gotta meet calm. In this game, you're up against this ball as an asset. You're up against one of the very, very best. The guy who talked me, pushed me, get into SQ, ran the volatility asset trading for Citadel. Indian fellow, extremely smart. Now he runs a pretty decent sized hedge fund in Europe. I mean, Chicago. But anyhow, and SQ back then, nobody knew what SQ was. SQ was still in a very, very alpha test mode, and they were looking for practitioners to go and use it. And they didn't have a feed; they would have an Excel you download. They would be marked up every night. Every time there was an update, there was one you can download. And then once they like the formula and cut it down, then it's got disseminated on major platforms. But long story short is you got to keep track of that. Do your homework. So we are going to go from J minus N to K minus Q. Okay, and then I'd like to see that. So there will be tomorrow night, and the volume tells you already what tells you he's beginning to drop. There's a lead on K. So given tomorrow, K would be lead. So now, what is it now? It's 3.84. What does it mean? This was the high at 4, -4. Okay. So yeah, when the value is very, very down, remember asset. Used to be -3, -3.5. That was the high. That's what it's reading right now. Now let's say we should use this value or reset. Let me do this. Okay. This is the most recent. Okay. You see where we are? Yeah. So a little bit of a topping event here. On the dailies, we bounced. We were flush last night. We bounced. We don't have a. It could be a little bit early. We don't have a rendezvous point. These three are same, except the inputs are different. And no biggie. I'll show you the inputs. That's not the issue at all. The issue is the code actually, where you can see it. You have to shift the rows over there, 14, 27. Okay. You can almost put anything else you want, but you gotta have some order or magnitude order change between the three. So you could see the rendezvous points. We finished this rendezvous point, as we were talking about here. But they were almost all three here, right there. All three were above 90. That was the day after the roll started. Not bad, not bad. So now we're heading out to this one. This to me is noise. We're not finished down here. When we get finished down here, which is not the down yet, by the way, when we could do this by another month, then I'll get long for a short bounce. This hopefully we see volume. If we still continue with no volume, I'll slip through it further down. Remember, I don't have a coda. But the only one coda I have is actually anti-coda. I can't trade too fast. Yeah, with time and digest. Our average has been once every 3 weeks. So this time we've had a little bit longer, but we'll see. Tomorrow will be a big tell for me. And ahead of a 3-day, I'm not going to do anything. But the goal is to get back on track with Nancy and I, with her on the options and me on the PMT, which has one option to it. I manage it myself. That's easy. But that's what the game is. Reason we haven't done it, because the vols were too high, bid ask is too wide, and you're dealing with exogenous news. This is what we call Russian roulette with 3 bullets in the chamber. Not going to do it. I'm not in a, what do you call it, quota issue. Somebody doesn't approve of that, there's a cancel button. PayPal. Eject, eject, eject. Come back when you're ready. My answer right now to you is no soup for you. Come back here. I don't have to prove anything. I got to go with my sense. My sense says nothing. When I talked to this guy with 50 years of option experience, and his one word was treacherous, it validates what I've been thinking intuitively. So we'll continue. We continue this, as Colin Powell says, we shall prosecute this war at the time or place of our choosing. I've never given to any pressure. No, that's not my thing. My dad didn't raise me like that. And he was a firefighter. So we're going to get data when we see an opportunity where it's easy to get in and easy to make money for. Remember, when you trade for others, it's very much more difficult to trade for yourself. When you trade for yourself, you have to answer to yourself. If you don't like it, it goes away. It gets moved under the carpet. It doesn't happen like that once you trade for others, whether directly or through discretionary, like through a fund, or you do it email service, or there's the other trade with email service. It's a different animal. So you got to be a little bit extra cautious. Let's go to up and down volume. Notice we did not get anywhere down here. Remember, even though it's 60 minutes, the values are the same. When you do daily, you show end of the day value. Okay. When we do hourly, there was another question and there's one question I got to read to you guys has a chart in it. I'm saying the question was why you show these 60 minutes and what he had done his homework. I was impressed. He had done his homework. He had read the what's his name? all Desmond's white paper that we had found on the internet. Let me see if it's available. I found it. We linked it and published it. That yeah, he's looking at daily. Why are you showing middle of a day? And my answer there was, it's because I want to see how it's evolving during the day. Let's go to daily. Nothing happened on the downside. And the test says you do 1 or 2 on the bottom. You swing way back with to the other side and do a 90. Then that's your bottom. That means pressure, pressure, pressure. Maybe with bathwater. Oh, he's out. Let's go in. The sheep is scared. Doesn't walk. Doesn't do anything. Watches there. I'm in a webinar. I'll call you right back. Thank you, sir. So you go to pressure to the downside twice, then turns around and goes back up. The big guys jump in first because they're anticipating it. They got the tools, they got the manpower, they have the guts. They do that, and then we, as a sheep or less of a leader, follow after that. That move creates a 90% upside. So 2 down, 1 up. It's a good buy. That's a good low. You're not having it yet. We here on Russell, we got 289 today, but there was no wash down here either. No wash here, no wash there, and no 90s yet. So far, if you go back to this history of this, you'll see that it doesn't meet the criteria of a bottom. So now there's no guarantee you have to see a bottom. I'm not saying that, but most likely this will sit there until that iron is full. Sooner or later, we get to a big bottom, a tradable bottom. I don't think we're there yet. All right. Now, let me come back here. I don't know, this fellow knows I have Wednesday webinars. Oh, wow. Doesn't matter. It's okay. So, what I want to show you. Oh, let me do 2 more charts I want to go through. That has to do with... this one. Okay, let's go here too. Which you guys can get out and take a look at. Look at what we have here. Does that look like treacherous to you? First of all, lower high. Boom, boom. Remember, these Burma bears, they sit forever. I don't do that. But I don't move on a dime either, unless we are dropping like a rock with a huge separation, which is not even here. Go back to March of 2020, where along that drop, one day may have gone flat. A couple of days we did a flip and then flip back because there were treacherous moves where we had a massive reading on one side, especially on volume and on VIX, and then snapped up. And we went up one day 3,000 points. I'm not dumb. You go up on the down 3,000 points, I'm sure you get. I don't care at what point I was long. I'm shorting that one. And it happened. Plus, there was an area where it was a total chaos. Nobody knew what they were doing. Part of it was not the system. Part of it was the medicine. Nobody knew what they were up to. There was no benchmark. Remind me of when I was doing my put call. When you were first to the space, I don't care how smart you are. When you were first to the space, there's no goalpost. So last year, 2 years ago, I was laughing about all this, saying, hey, this guy made a mistake, that guy missed it. Listen, everything there is new. You just can't apply that. Let's more data come in, and then we'll see how the chips drop, where the chips fall. The problem is, nobody had that much time. People were dying. They're dropping like flies. So I realized the pressure on those sides. So those days, we would go to massive moves back and forth, where I was always there to see if does it make sense? Have I gone too far? And I was booking. Listen, we booked at one point like 13,000 out of 11,000 dropped. You add the back and forth. Remember, 11,000 was the top to bottom, right? But we're doing the travel, right? So I would come in 2 or 3 of these, and then move up, take this one, stay flat, get back here, and then drop down, come flat, or not do anything. Let's say enter here, jumps up, go flat, wait a few days. I was not dropped the whole thing from one. I didn't know. I was scared to death myself. But this move from the top to bottom was 11. we took about 13,000 outputs in by just strategically getting out. Not because we knew. No, nobody knows what the next tick is. No. But your gut feeling, you're reading and you see what the VIX is doing, saying, you know what, enough is done. Let's book what we got and we go to the next thing. So that's all this shaped. Now, look where we're now. We always talked about these separation of these two lines. Now you got a soup. And also, what happened today? Wednesday. What happens on Wednesdays of an option expiration week? The result of prevailing push. Prevailing push, right? Why? Market makers. They sold you those positions. Do you think they like you? Why did they go when you went short here? You bought some puts and they sold it to you. So now there were short puts. And it keeps going lower and lower. What do you think they're going to do to you? Let you get that pay into expiration? What do you have for breakfast? Look in the mirror. No, they're going to come back at you. Where? Midweek. The week is short. So we'll see how they let this go. So remember, tomorrow morning is expiration of April. So it's a dual witching. So you have equity and an ETF option. No futures. Futures stay until June. But this is the one where you get hit by both. So 2 of the 3 is hit tomorrow. So for those to the options and this is all strictly CBOE, no CME. So options and ETF, both stock and ETF options expiring tomorrow. ETFs would be in the morning, most of them. Some of them would be American, it would be end of the day. Most are European, will be in the morning, including SPX and NDX. So you got a little bit of a displacement there. That's why by pushing this up, it made a lot of those options, especially the last 2 days, worthless. Why? They have to protect their ROI. They find one little bit of a good news. They put that up. They have the best marketing. They have the best Management Avenue advisors. You have no idea what Wall Street can do to you. And all of them are rallying. While oil is rallying, hello, are you with me? Oil is rallying, right? And these guys, by the way, the CL is going to move too. Yeah, because tomorrow, well, Monday has to be a new contract, definitely. So probably most of starting tomorrow, we got to go to a Q contract. I have to check the volume. So, to me, going back to this chart, this is expiration related. That's why I look at this. It didn't occur to me until just now. See, that's why I like these webinars. You think these are for you? No, they're for me. Remember Feynman? I forgot his name. Is it Jim? What's his name? Hold on. The mathematician that worked with Edward Teller on the hydrogen bomb. Richard. The Richard Feynman? Hold on. Let me test. Let me see. You know what he said? If you want to learn something, go teach it. Yeah, there we go. This guy. Richard Feynman. Yeah, he was a famous mathematician and taught at Princeton. Yeah. Actually taught when I was there, but we didn't dare go in there because he had won a Nobel Prize. He was on the second floor of Jackson. But I posted his quotes. You can follow him on Twitter. There's a fellow that most posts. He says, if you want to learn something, go teach it. And it's a counterintuitive, but if you want to be able to be in front of people and teach something, you better learn it to the nth of a degree. But go to other world and come back on that subject. And that's what this has done for me. It just hit me. What happened today was really what I've always looked for, which I've mentioned, the reversal of midweek. It happened. You just don't think about it because middle of this is a short week. Let me go back here. Thank you, guys. Yeah. This move here is because of the expiration. Because nothing has changed. Exogenous CPI, same problems. The CPI is actually, people are higher than we expected. We printed 11.4. Our monthly is 1.4. That would be, extrapolated would be 16.8. If we keep that rate. We never do, I realize that. And there's noise in the measure. But remember, this is numbers. This is a lot better than employment situation. Whereas a survey, and you're talking about, I'm going to go back, not, I work, I don't know, I'm comfortable, whatever. This is numbers, number crunching. By a series of industries, it's like, I think it's 50,000 components in a CPI, PPI computation. So it's numbers. When did we go up? That was not good news. So, with that said, bottom line, what's bottom line? Then I'm going to go to a question. We're going to take that. Is that I am tactically short. Strategically, we have to go. I would not even worry about that right now. I would go to challenge the lows and get a bullish divergence on the indicators. I bet you it won't be that easy. Why? We're too far from the last lows. So most likely, if we go up, we'll see a W down here before we go up. This won't be part of that W. Why? It already was. It didn't work. You already had your W. It didn't work. We dropped it. My thinking is we're going to have a W down here somewhere. With probably the middle of the road, like kind of middle of the area, we would be around 4,000. Then that would be a good buy. That would buy SPYs for the family. I would buy some options for those who are a little bit more aggressive. My families are not aggressive. They're just kind of like, they think I'm nuts. That's okay. Because what they're in real estate, safe stuff. My sister's, 3/4 of what she's worth is in cash. It's been cash for years. She's that conservative. Yeah, she does not worry about anything. Doesn't want to worry about anything. Remember, we came out around with a shirt on our back. You come back from that, it's like my parents and World War II. Your parents in World War II. You go through that kind of hardship, your value of cash is different. To me, market is a big printing machine. And it's legal. So, if you can get there. I've said before, I'm a legal drug pusher. Not a drug seller or dealer. I'm a drug pusher. Why? If I can hook you on this kind of making $1, you'll never go away. Being honest, walk fun. Now, the gentleman here, I would not going to mention name, and I always don't. So bear with me. Let me go and find him, and then he's got a chart. We want to look at that, and we'll go forward. Hold on 1 second. Is that here? Yeah. No. Yes, hold on. I see a chart. Okay, the question here is, does this chart alter your opinion on the bear market? I think I already explained what my positions are, but here's a good value. Now, what day is that? This is old, right? Yeah, this is way old. So this is October, this is April. We're way past that. Is that a weekly? Last day is 4/4. So that's missing a week of data. I think we've gone past that in terms of data. Yeah. And I don't do much trend lines, much more of Sigma channels. It's much easier to draw on a French curve because we have the tools than the ruler. That's basically Sigma channels look like French curve rather than a ruler. And so I still think we're overpriced. Yeah. I said in October, we're at peak America. Now, that doesn't mean we're going to go down all the time. No, but there's going to be some fluff coming up. We're not going to be at 23 PE. And current action shows that. Actually, the peak of the year was first week of this year. So it took about 2 months to kick in, but this is advice and objective of everybody once they lines up. I was talking back here. I was just lone voice. And the top tick came in January, I believe, if I'm right. So, my position about, I'm just saying the opinion, the behavior that I see is a bear market rallies. We're moving up very fast on low volume, then we come back and take the lows out too. And everybody you talk to that's heavy duty out there, they have no business here to be long. 25 new people have come in from PPP money that never traded before last 2 years. So they did not even see the pressures of 2020. Forget 2008, forget 2012 and 13, which were some tough years if you take a look at it. Look, 2013, 2014, look at Thanksgiving, what happened. I mean, we were going to, there's a seasonality of up, it went down, and then it would explode up, and then it would come back down again. They did not even see 2018, again, Thanksgiving and December drop. These 25 million have a lot of money, went to two places, real estate and Robinhood. They're all going to be taken back. Do you think Wall Street will allow that? Watch me. If history ain't any guide, you show up with some money, more Wall Street will come after you. Especially this size. 25 million. Not a joke. So anyhow, the gentleman who posted this chart, thank you. The question was, do you change here? I'm reading it again from his email. Does this chart alter your opinion of the bear market now? It also tells me you're long. It tells me you're too long. Yeah. So and he's here in the meeting, so I don't mention it. But it also tells me that you're too long. Yeah. So go through your names. Don't get rid of the good names. That's probably where you should be hiding anyway. But get rid of the bad names. Yeah. The ones that you're not sure about: balance sheet, products, and management. Those three things. I'm a Jack Chilton student of financial analysis. Management, balance sheet, products. Any of them have a little bit of Bauer color to it, get rid of it. Okay, any questions for me? No questions? Are we good? I'm assuming you guys can hear me, right? No questions? Hello, 1, 2, 3. Is everybody asleep, or did I become a cure for insomnia? Okay. So thanks, Dennis. Okay, Dennis. At least Dennis is awake. Okay. Oh, Greg is awake too. Okay. All right. All right. We'll do this again next week. I'll probably see if I can get a trade in tomorrow sometime. I'm more on the buy side. I would especially do that if we have a link up, uplift. I'm sorry, not link, uplift. But remember, we also have a 3-day data, but that's not going to be an issue. I'll buy several, at least a couple of months forward. Notice we have been pushing that forward. The problem we have is we're paying also more in premium. Yeah. And but if the X minus S goes our way, bingo, not a problem. So, biggest mistake I had on 24 did not cover because we had a technical issue at the open. Can you believe that? Yeah. Of course, everything was crazy that morning. But our 1.1 trade, 1.1, we paid for the spread 1.1 went to 5. And we had a bunch of them. Yeah. So we still made a little bit of money, but a couple of guys got out early. My cousin got out early. But he's a perma bear. And all this time I was telling me, find me a short. I said, I can't find you if I don't see it myself. But the one we got, he watched like a hawk, and he did pretty good. And then, of course, once the element of surprise was gone, the pricing changed. All right? Next time we'll do better. Thank you so much. I'll talk to you all. I'm closing this. I've got to open up. It's after 6. I need to open up also the ES for the folks who trade ES. That's on Zoom, but we turned it off so we get a better connection here. Thank you.